Welcome to the market recap presented by Tackle Trading. Get in the game.
Good afternoon, Tackle Traders, and hello, YouTube. This is Frank coming to you with the market recap. It is the 8th of July. It is Monday. Good afternoon, Lauren. Welcome out. Hope you are doing well. Hope you profited off of Shop. I know you and Emily were talking Shop, no pun intended, over on Twitter. Had a really nice pop here today on old Shopify. And good afternoon or morning to you, Lloyd. Hi, Fortino. Scott, always a pleasure. Great to see you, Patricia, as well. Hope you guys all had a nice weekend. It feels a little bit weird, last week's change of schedule. I'm a creature of habit, and so I'm not quite normal yet. It'll take me all week to get back into it, but then we don't have any 3 days for a while, so I'll be good. So broadly speaking, we gapped down on the open, and basically that was it. We really just kind of back and forth, going nowhere throughout the course of the trading day in the S&P 500. You did see some selling in technology, communication services. Apple caught a downgrade this morning. A couple of the semiconductors did as well. A little bit of selling over in tech here today. We saw some selling over in the healthcare sector as well. Services, kind of the big winner, I guess, today, holding up a little bit better than maybe some other sectors within the market. Nicely done, Lauren. Great to hear that. Here you can see the S&P gap down on the open and nada. Nada, no real price action really whatsoever. Maybe the market's looking at Powell's testimony here this week. Maybe it was just the way that the day was meant to be. Either way, there was very little movement here today, broadly speaking. And of course, that's not going to really change anything in our overall index charts. Little bit of a pullback. I mean, it's probably aggressive to call this a pullback, but we have kind of started to see lower highs over the last few days of trading. Kind of need to see that turnaround candle, I think, to get traders ready to rock and roll. And maybe it will take, something from the Fed with that testimony, and maybe, maybe that will be a bad thing. But as of right now, no reason to believe that to be true. I'll go with the charts, still kind of in that wait and see mode on the S&P, on the Dow Jones as well, kind of working right back into same general price action, drifting down into that 9 EMA. And good afternoon, Linda. Great to see you. Hope you're doing well. Hope you had a great weekend. Still just kind of hanging around that old breakout point, though. So much like the S&P, we're just waiting for that price action to kind of get buyers back on board, and I think probably the easiest way for confirmation of that right now, in my eyes at least, is going to be taking out those highs from last week, broadly speaking, in the market. That'll clear out any of the little intraday stuff that may be a concern one way or the other. I don't think it's that much of a concern at this point, but I'm just one person, right? The market certainly doesn't care about my opinion. Good afternoon, Emily. Great to see you. Over in the NASDAQ, like I said, tech, little bit hit here today. Saw some selling, Apple on a downgrade, a few of the other semis on a downgrade. Not really much of a concern, in my opinion, at least, bigger picture, but certainly pushed us down today. You did see the NASDAQ hop really nicely off of that 9 EMA. Again, this is the one area of the big indexes that hasn't been able to breach that resistance, even though that's probably not as strong of a level of resistance. It still is a level that we've seen some serious price action off of before. So getting through that, going to be that next signal for the bulls if we don't get a deeper pullback. So really not a lot has changed here from where we were on Friday, broadly speaking. Just kind of one of those days. But there's some interesting setups going into the early part of this week developing in the market. So that's always a good thing. Lastly, over in the rut, really not a whole lot to see here, just hanging around. Probably something we're all okay with, right? As condor traders, this last week or so of it really doing nothing after having a really good close to 2 weeks ago, doesn't really hurt my feelings any. Still sideways overall in my estimation. 16, still the big number on the top to be looking towards. So not a lot of interesting things when you look at the overall indexes. I guess a little more interesting when we look at our sectors. We did see some selling in the material sector, working back in towards that 58 zone. Not too concerned about it, quite honestly. Think we need a little bit of an upward swing as confirmation, but if we're thinking breakouts, we're going to have a couple of candidates, well, probably more than a couple. I've got a couple of candidates, Echo Labs, if we, bounce aggressively off of that 58 zone without that small body turnaround candle, a breakout over here could be interesting. Although I think you could argue that Lynn is potentially a little bit more interesting in my eyes, at least, but both respectable breakout candidates, I believe. Still liking where the sector is as we're looking at it broadly on the ETF level. Did see a little bit of spike in volume, need to see a little bit of something, right? Some intraday double bottom, W, turnaround candle, doji, hammer tomorrow, something in this 58 range to give me some inclination that there's a turnaround will make me very excited about this sector for the later part in the week. But it looks like we're going to at least need one more day. But if we do have a strong bounce, breakouts could potentially be in play here as well. If we're going to fail this break, there are certainly going to be candidates out there. Old CC, they were on one of the reports, I always forget, but broke support here today. As you can see on the weekly time frame, they don't have a lot to hold them up. That's a pretty ugly break in my opinion. So there's certainly going to be some bear plays out there if there's a little bit more selling within the material sector. That's not what I'm looking for right now, but doesn't mean that's not what I'll be looking for 2 days from now. So over in energy, just another day of your guess is as good as mine. If you have a strong opinion, I can't understand it, but my less strong opinions no more valid. We are really just stuck in a range right now on energy, and as really has been the case over the last week or so, it's just one to, in my eyes, leave alone. Sure, we can do some cash flow stuff off of it, nothing wrong with that, but directionally, I think we're just letting it figure itself out. Still, the most interesting chart in this sector continues to be Chevron for a big breakout potentially, but we're a ways away from that, and it's going to likely need the sector to be breaking out to break all of that resistance. So certainly an interesting area to be keeping an eye on, but I really am not seeing how great directional trades can really be shaping up even this week, with maybe the exception of a break to the downside here. But even then, I guess I'll reserve judgment for when and if that happens. I don't have a strong feeling about it right now, and I expect that support to continue to hold. Over in financials, much like the broad market, just was going to be a little bit of a gap down and a little bit of a hangout type of a day. So really not a lot new to see over in the financials. Just a quick note, the financials are one of the early sectors to report earnings. Many of them will start reporting here next week. So for directional trades, it's going to put us a little bit on a clock potentially if you're not willing to hold through those earnings. So just keep that in mind if you're playing into anything really right now, as earnings have to be taken into consideration for our directional trades or our earnings specific trades, of course, obviously. But finance will start to see quite a few names reporting here next week. Broadly, I mean, there's really not a lot. The banks are kind of holding their own after that nice little rally, kind of hit a little bit of a lull, got a little bit of resistance on the ETF. Pushing through that could be a little bit of a signal, but with as close as we are to the upcoming earnings for the majority of these financial stocks that make up this ETF, I think we need to tread a little carefully just because we do have that ticking clock. At least I do. I don't hold swing trades through earnings. And so I'm going to have to pass, on a lot of things in the next couple of weeks, begrudgingly, but that's okay. I won't complain too terribly much. I'll just be glad when it's over. So not a whole lot there. Industrial's a little bit more of a pullback here today, still dancing around this support zone. Big names in here, Boeing, we all know the drill there. It's just a stay away for me. It continues to just not look great. Even after that nice break, all it took was just a little bit of maybe bad news and just right back into at least neutrality. So I continue to stay away. Certainly they impact the ETF as a whole, though. 3M broke below their support zone today. You could argue that, well, let me rephrase this. I would argue this is a bearish signal. Whether or not that's something to trade into, I don't really feel all that comfortable with that, but that doesn't mean a whole lot. We do now have a level of resistance sitting above us that we know has pushed us down. We have taken out some support. Little downward movement there certainly would be more of a bearish signal in my eyes. Have an ugly, but it is a pullback going on CAT as well. CAT not looking pretty, maybe not a textbook pullback, but kind of a little bit of a drop throughout last week. Tried to get moving up here today. People got a little too, I guess, a little too excited, a little too soon. Probably need to see a little bit upward movement, but that's kind of mirroring the overall ETF a little bit, where it's kind of pulled back throughout last week and at least testing a potential support zone. Over in tech, held its own really when you consider that we had the gap down on the open within some of those tech companies. Held its own, all right here today. Oracle continues to maintain really good strength after that recent breakout. It didn't care too terribly much about that news here today, but even some of the bigger names, they look very unchanged. Microsoft still knocking on the door of resistance. Apple, yeah, they caught the downgrade, so they're going to have that gap on the open. I don't love that. I don't really love this chart, but they held their own here today as well. Your Visas and MasterCards continue to show pretty good strength as well. So when you consider how it started, really it ended pretty boring. I think it held up pretty nicely. It could have maybe sold a little bit more here today with it kind of being the focal point of the downward move here on today's open. Looking at the ETF, much like the NASDAQ, I mean, the NASDAQ breaking resistance will really be a great boon to this ETF, of course. But as you can see, many of those stocks are kind of not terribly, they're either just recently have broken through some swing resistance or kind of knocking on the door like a Cisco or a Microsoft. So, we might have to deal with a little bit of resistance in many of the bigger components in this ETF to get through there. And good afternoon, Amy. And hey there, Michael. Always a pleasure, guys. Great to see you as always. Hope all is well in your neck of the woods. Over in the staples, just holding its own. I mean, it's really hard to make, say very many interesting things about the staple sector these days. Nice bounce off support, still hanging right around that resistance zone. Confirmation wise, much like the broad market, kind of taking out last week's high, I think will be the continuation signal, I guess, that I will be looking for, but continues to show a lot of strength, really good support level, really strong price action off of that 58 zone, along with that 50-period moving average lining up right there. So as long as that's true, as long as we're holding above 58, I'll continue to be really boring with the staples sector. It just continues to, and that's a good thing, right? That's a good thing. Over in utilities, much of the same, but we do have a little bit more overhead on the ETF than we do maybe on the staples ETF in my eyes, but still overall strong. We know where 59 is our support. Again, we have that 50-period moving average just north of that. A break would really be good signal, and kind of like we talked about late last week, really for initiating new utility trades, I'm personally wanting to see that resistance break. For existing trades, I have no problem with holding them at this resistance. Really, after all, this is just a swing level of resistance, right? But for new entries, I think it best personally to get through that resistance before I start looking for new positions over in utilities. But again, it's really hard for you to convince me that you should go bearish on utilities, and I don't know that everyone has to agree with my stance by any stretch. Healthcare did see some selling here today. It was down well over 1% on the intraday, but we really caught our footing that later part of the day and rallied very strong to close the day out. Maybe we need to see a little bit more movement here. And there are a few concerns of note. Certainly somebody in my watch list to the downside is Lilly. Certainly we talked about their initial break, their retracement, and now we're pushing right back into that what's now turned into potentially a pretty legitimate support level. We bounced off of it twice, haven't broken it yet, may very well never break it, but certainly if that gives out, I think these belong in a bearish watch list in my eyes at least. So, and the pullbacks aren't really that great, as you're kind of going through the pullbacks, they're there, but they're not really all that fantastic. You have a UNH, a little bit of a pullback, a little bit of a drift up. The Pfizer pretty steep pullback, maybe if we see a turnaround candle, but going into tomorrow, I have a really hard time thinking, yeah, that's very, that's an exciting thing to be looking to trade into. Merck, little too steep for my taste, working all the way back, near its breakout point support level. I don't like that deep of a pullback. Then you have Abby V here, options report, stock report. I can't remember again. You'll always have to forgive me. I could kind of put them in the same reports in my head. Serious downward movement here today. Of course, they had that buyout, with those buyout news a couple of weeks ago. Strong rally, and if you can kind of see really strong movement to the downside as of late. You have Abbott though holding its own kind of resistance zone. So maybe this is something, if there's a sharp turnaround type of thing, I'll be looking for. Hopefully we see a little bit of slowing momentum in the next couple of days. That should open up the door for better pullback opportunities if we're looking for them in healthcare. Right now, I still like healthcare, but I have a hard time seeing bullish trades that really blow me away tomorrow within this space with today's selling and just with where some of the bigger names within the sector are. On the other side of it, you've got XLY just continuing to show tremendous strength and resilience, breaking that resistance last week, just continuing to push up and up and up and up these last few trading days. Things are looking good. And we're also putting together these little 3-day ceilings. You've got one developed on Nike. You've got one developing here on Starbucks. So, after those breaks that we saw, a little bit of consolidation up top, a break above and beyond those resistance zones, always at least a potential entry point. Target showing well here today. Hey, Jasari, great to see you. So things are looking really strong. Nike, great day today. I don't know about this chart, but hard to really argue with the price action that we saw working into some resistance. And one of the nice things about Nike, and I don't know, maybe we need a little consolidation looking at a weekly chart, but at least we have our earnings behind us. So if this is a breakout next week, we won't have to worry about that earnings date getting in our way. So still a lot of strength. Home Depot continues to show strength, breaking through some resistance here today. Well, continuing after breaking last week, you could certainly call that a breakout. Don't have earnings for a while on Home Depot too, so that's certainly a feather in its cap. Just overall continues to show quite a bit of strength. Even some of those brick and mortar types are holding up. They're holding support. They may not be looking great for buys to me, but they are certainly holding their support zone, which is certainly never a bad thing. And that's really being reflected in the overall ETF with the brick and mortars, who are usually the ones in large part that are dragging the ETF down, in my opinion. When they're kind of cooperating, it really can move nicely. And that's exactly what we've seen over the last several days since we broke out of that resistance zone. Over in real estate, same deal as utilities, but I do like it better than utilities. I'm going to not steal that one. That one's important. This one I can always draw again if I need to. Again, we've got this little 3-day top that's developed. We're kind of seeing that broadly in the market. It's a little nicer on some individual stocks, maybe a little nicer on this ETF than the S&P, but that's kind of the way the market's really developed these last few days, holding up after the break, but not running with that break. So keep an eye on these ceilings that have developed over the last few trading days. Those breaking to the upside should be at least a little bit of a bullish signal to traders to try to come in and sneak out a little bit more. And that's going to be my read on the real estate sector as well. Still room to go, even if we are worried about resistance. We've got, quite a bit of room. Again, it's not a lot of dollars, but that's quite a bit of room on the ETF into that 3850 resistance zone, which, is a swing resistance zone, of course. So we have to respect it, but it's not like this is a major price point that we need to be terrified of necessarily. And hey, Zach, great to see you, my friend. Hope all is well. And lastly, over in communication services, more selling here today. You've got Google that is kind of in its own little energy area where, you could make a case either way, depending on your bias. Probably best not to make a case whatsoever, at least until we kind of come out of this little pinch that's developing. But we did breach resistance on Friday, smacked into the 50-day moving average as a reward, pushed down off of that 50-day moving average here today. Tough chart. I think we probably have to leave this one alone for the time being, at least. Breaking above that high from last week could be a little bit of a bullish signal, though. I'll pull back into this trend line. Maybe we could talk, but of course, we've got earnings in 17 days, so time is going to be a factor there. Probably not anything on Google directionally until after earnings, in my opinion. And last, Facebook, nice little breakout candidate. I don't like Facebook. I don't really like the way they move. I don't like to use Facebook either. You guys know me, I'm a Twitter person, but that's beside the point. There's a pretty clear breakout opportunity developing on Facebook in my in my and the other coaches. You know, we have this guys in the options report this week. So certainly a breakout candidate worth watching as we're watching this communication services. On the other side of it, you've got EA all of a sudden potentially going into a breakdown watch list. Now, you know me, I'll always say it when I don't have to make a decision, but as soon as I get confirmation, I never want to trade EA. So that's always, and that's, I don't mind that. I don't like the way that they move, and I don't like them, and I know I'm very biased against them, but certainly pushing into a support zone that gives out. I mean, that's a pretty clear level of support that's developed over quite some time. So I could understand the argument on that side of the coin. I'm going to let somebody else deal with EA. Most people are probably better at it than me. They just one of my stocks between their video games and my always complaining and then their weird movement. They are not my cup of tea. So on the actual ETF itself, we're going to need to see, as we always do, Facebook/Google help one way or the other, right? They're just too big of components to that ETF. So a Facebook breaking resistance, a Google breaking resistance could bode very well for XLC if we're able to see that 1-2 punch in the days to come. So that's where we find ourselves going into tomorrow on the different sectors. Fairly uneventful in the on the commodity front too. We did see some nice movement in the dollar after that, nice candle to close out last week. Again, I think you almost have to put this back into neutrality if you're a swing trader. If you're a day trader, you're just going with the current intraday trend and probably had a pretty good couple of trading days on the dollar. Right now, I think, between breaking this trend line, this big candle we saw last week, followed by another big break, closing above the 50, I don't think you can call this a bearish retracement anymore. I think you have to put it back into neutrality. If you ever took it out of neutrality, that is a little bit of a spike on the VIX here today, but really I don't believe there's anything to see of any note in the VIX at this point in time. Still sideways, hanging around that 1400 mark on gold, maybe a tempting price for some of the gold bugs, although we probably need to look into the intraday to get some signals. At this point in time, it's probably going to be above this swing high on the hourly and these hourly averages that are going to line up really nicely with that. I think if I'm looking at this from an intraday perspective, that could be an interesting price point if we were able to push through it. Right now, I think the best thing for gold overall for new trades for us is to continue to dance in this trading range and then ultimately break to the upside a little bit further down the road. But the closer we get to the support, I can understand it. I'm certainly, again, I can't really make any bearish argument against gold at all right now. And as long as we're holding this really can't, as long as we're holding this 1385 zone, that 20 period moving average, I cannot in good conscience say much bad about gold. Not really a great spot to trade though right now, at least from a swing perspective. And I'm going to double that over on silver. I still think silver has gotten so messy as of late. It's so hard to get much of a read on it. And to me, at least, the best thing to do is leave it alone for the time being. I could understand if you're, somebody interested in owning silver, thinking boomerang type trades. I could understand a break back above this 1560, which could be an interesting break, but we're quite a ways away from that, potentially being at a point where we could talk about a directional trade. But right now, I don't know how you trade this thing. Very sideways, very volatile, not a lot of clear direction, very sideways. You saw that weekly chart. When you put this on a weekly time frame, it's just, I don't know. Maybe you like it as a weekly pullback if we end with a doji at the end of this week and see some upward movement next week. But boy, that's asking a lot. So at least for right now, still very choppy on the chart over here in silver. So it does, Zach, and it's got me confused. I'll be the first to admit it. As long as it's behaving that way, it's going straight into timeout. We'll get an opportunity. And one of these days, we're going to get a really nice bullish opportunity on silver. It's just doesn't look like it's likely to be this week. So it does look very confused. Natural gas continued that momentum from Friday, rewarded right into that 50-day moving average, right into that old breakdown point on the chart. So this is a big battle. Selling here makes a lot of sense. Betting on that resistance, that old support to act as new resistance. Looking at this on a weekly chart, looks like a little bit of a bearish retracement without confirmation. That's the big caveat here. This is Monday. You know, we need this candle to look like this by the end of the week and get some downward movement to get that confirmation on that weekly time frame. Tough maybe to predict that that's the way it's going to go. Certainly a battle worth watching. Breaking back above that, I think you have to call it a bullish signal. I wouldn't call it a tradable signal, but I would take some bearishness off. I think you'd have to. As long as we're below that breakdown point, that 50-day moving average, I'll maintain if it makes sense technically, the risk reward is there. It's a perfectly legitimate bearish candidate as long as we're below that breakdown point. And lastly, where'd you go there? Over in crude. Not a whole lot of action here today as we're kind of just fighting with these moving averages now. Crude is in its own tough little spot. We've got to break through these averages at the very least. But right now, I think our best signal is going to be a break above this 60 zone of resistance or a break down below this 55 zone of resistance. There's going to be a little bit of room if we break this little floor that's developed over last week, but there's only about $1 in there, so that would probably be more suited to look from an intraday point of view. If this does give out at 56, maybe an intraday play into that 55 could be on the table, but we'll have to be there when that happens. I think we have to respect that 55 zone as a pretty important support level personally. So I guess if you want to call this a pullback, you could, some downward movement, but I think that's stretching it a little bit to me at least. So that's where we find ourselves after, I mean, it was fairly uneventful. We have some interesting things going on though. We got, Lilly knocking on the door of a breakdown. We've got CC breaking down. On the other side of it, you've got CMG running right into some resistance, pushing right into it here today, looking pretty interesting. There were a few other interesting stocks that kind of caught my eye going into tomorrow. I've got Allergen here after kind of sitting right on a support zone. Not a lot of support, so another breakdown candidate going on over there. Still have Humana in a breakout list, but probably that's got a little bit to go going later into the week. You have OC going to need another day, but an interesting little pullback developing here on Owens Corning. Need a little bit of a turnaround candle, so probably one more day over there. Disney still knocking on the door. That could break resistance, at least price-wise, as theoretically as early as tomorrow. You saw RCL break down pretty heavy here today. A little bit of a spike in volume. Threw this one up on the Tackle Trading Twitter as it was falling through that support. A double whammy of falling below the 200 and that swing support level. Certainly an interesting character going into the rest of the week. WWE still in a breakdown watch list, a little ways away, probably most likely going into next week if it is going to give out on that support. But that's a very clean support level. I think that's going to stay in my breakout list until it can't justify being there any longer. So a few interesting names out there, very interesting names in the materials for breakouts if we see strong movement. If it's just one of those days that either the sector or the whole market's really strong tomorrow, got some opportunities maybe to push through some resistance zones. Same with NOC in the industrial sector, knocking on the door of a little breakout itself. So right now it feels like it's breakdowns and breakouts is all that I'm seeing, which is not uncommon, but I'm certainly open to a pullback. But right now, with kind of the way the market's moving, I think that's kind of where I'm going to have to be looking going into tomorrow, at least, until something shakes in the market a little more broadly. So that's where we find ourselves. It'll be interesting to see if it's another boring day leading into Wednesday, or if we get a little bit of movement here tomorrow. Pepsi, the only name of note coming out with earnings before the open tomorrow. So that's something we're taking a peek at on the before the market opens. See how they're responding. Always interesting when some of the big names, even if you're not going to do anything, always interesting to see how they react. Earnings are right around the corner. Again, make sure you are keeping that in your thoughts as you're managing your trades, building new trades, all of that fun stuff. We are a week from now, we're going to be in it, and we're going to be spending the rest of the month there. So enjoy one more week of not a whole bunch of earnings news, because it'll be a few more till you get another one like this. Ladies and gentlemen, thank you so much for your time. It's always my pleasure. Appreciate you guys joining me. It's so much more fun to do this stuff with you guys than on my own. So appreciate every one of you who join me live. Appreciate all of those of you who catch the recording a little bit later in the evening as well. If you are new to the channel, do be sure to subscribe and hit that notification bell. Join us over at Tackle Trading on Twitter. You can, of course, find me at FrankMartin23 on Twitter if you're ever looking for me. Be sure to check out the Tackle Instagram. Not sure who the stock of the week's going to be, but check it tomorrow, see who it is. I guess that we'll all find that one out together. So that will do it for today, guys. But as always, thanks again for your time. Appreciate each and every one of you. You guys have a fantastic Wednesday. I told you, it's going to be all week. Anything that messes with my schedule completely throws me off. Enjoy your Monday. It is not Wednesday as much as it might feel like that. So enjoy the rest of your Monday. Yep, I'll be doing my onboarding to welcome any new members. I don't know. With the 4th of July, it's going to be interesting. We'll see how that one goes. We'll see where that one takes me here tonight. But if that is you, look forward to seeing you over there. With that, ladies and gentlemen, get out of here. Have a great rest of your day. I will see you same time and place here tomorrow. Bye, everyone.